Well, good morning, everyone. My trusty clock says it is 9 o'clock here in Indianapolis, and so we will go ahead and get started. Glad to have everyone with us today. I'll give everybody a couple of minutes or so to kind of get logged in if we have any late joiners. But I do want to say I hope everyone's having a great summer, and I hope you get to enjoy the last few weeks of it as we head out of August and into September. I think September and October are two of my favorite months. The weather starts to cool down. The kids are back in school, and it's just a great time of year. So I hope whether you're way up north or way down south, you're having a good August and looking forward to a great September. A little housekeeping, just to remind everyone, we are recording this, or at least I think I'm recording. Not quite a pro at this yet, but we are recording this, and then we'll edit it later, some of the dead spots out, and make that available on our website. So if you have to bug out for some reason and you miss something, you can always go back and catch the parts you missed. Or if you know someone who had problems logging on for whatever reason, or they just forgot and they missed it, you can let them know that the recording will be on our website in a couple of weeks, maybe. And if you have questions today, as you know, the second half of today's webinar is open for questions. If you could put those in the Q&A and not the chat, that will help Mike and I as we go through and answer those later. So again, put those in the Q&A and the chat, and we'll get to those after we get through our material and open it up for the questions. So I wanted to go over really quickly what's on tap for today. First, we're going to go over financial assistance to non-governmental units. These are things that you report on your annual report. And with ARPA, and some of you providing ARPA funds to non-governmental units, we thought now was a good time to get a little refresher on what that means and how to do that. After that, Mike's going to go cover some key contacts, or some places that you can go for some specific items that might come up in your day-to-day activities. And we will wrap up with a discussion on forms, both forms that are prescribed by the Board of Accounts and those that get used in lieu of a prescribed form, and how that form would then get approved during an audit, and how that whole process works. So we'll start off today with some information on providing financial assistance to entities that are not governmental. When you provide such funding, it may or may not need audited, either by the Board of Accounts or a private examiner. Indiana Code 5-11-1-7 allows the state examiner to authorize or designate an independent public accountant to perform the examination or the audit that is the responsibility of the State Board of Accounts. Currently, independent public accounts perform audits for like housing authorities, military reuse authorities, and some state agencies like MPERS, and nonprofit entities. And those are probably the ones that will apply the most in today's discussion. But there are others. That's not an all-inclusive list. I just want to highlight some of those things for you. Indiana Code 5-11-1-4 requires the annual financial reports from entities. And what's an entity, you might be wondering? Well, 5-11-1-9 defines entities, and it requires audits if the disbursement of public funds meets statutory thresholds. So the audit threshold is $200,000 in governmental funds dispersed by the entity, and 50% or more of the entity's total disbursements are governmental funds that have been provided. So entity is defined as a provider of goods, services, or benefits maintained or supported basically by public dollars. An entity does not include other units of government. So any money that goes to another governmental unit is not considered an entity for these purposes, and that's important to keep in mind. It also doesn't normally include any vendor type of situations. And we'll touch on those, I think, in a little bit. But an entity can be a for-profit corporation, especially when we're talking about ARPA dollars that can go out. And that's why we're discussing that here today. It can also include not-for-profit corporations and unincorporated associations, organizations, and even individuals. Some examples of non-governmental entities that we've seen are volunteer fire departments, local YMCA, youth sports leagues, senior citizen centers, 4-H clubs, daycare centers, health service organizations, and community centers. So why is that background and that information going to be important to you for what you're doing as your clerk treasurer or city controller responsibilities? Well, cities and towns can and sometimes do provide financial assistance to non-governmental entities. We think one of the most common ones you might encounter is if you're a smaller town and you contract with a volunteer fire department for fire protection services. That's a good one that we see a lot. If your town contracts for fire protection with a volunteer fire department, then that department would be considered an entity under the statutes that we've talked about this morning. And under those definitions, and that volunteer fire department then would have to submit an E1 in Gateway. We'll talk about E1 on the next couple of slides. I mentioned some vendor type relationships that would not have to submit an E1. One would be like your attorney. You have a contract with your attorney, but that would not fall into entity that's not providing assistance to a non-governmental entity. That's a vendor type relationship that you have, or you might have a contract for mowing of your town cemetery, and that vendor is providing a service, but it doesn't fit the definition either, and it's more of a vendor type relationship. So if you do provide financial assistance, there are some things that you are now required to give that entity that's receiving the funding. And the September 2016 Cities and Towns Bulletin detailed the 5 pieces of information to be provided to non-governmental entities that are receiving your financial assistance. So what you provide should be done annually in writing when the financial assistance is agreed upon. The first thing that you need to provide to non-governmental entities that are receiving financial assistance from you involves the E1, the Entity Annual Report, or E1 for short. The filing requirement is established by Indiana Code 5-11-1-4, and the audit requirement was established by 51119 that I mentioned earlier. So you need to inform the entity of their requirement to file an E1 in Gateway with State Board of Accounts. An E1 is a report that provides general information about the entity, and it also discloses the public funds that were received and spent during the year. And based on that financial information that gets reported in the E1, the Board of Accounts advises the entity if an audit is required or if the entity qualifies for a waiver of that requirement. So it is therefore very important that the public funds received and dispersed by the entity be properly reported in their entity annual report or their E1. The second item, you need to provide them with the source or the sources of funding provided. and is categorized as local and or state funds, as in the case of maybe a subsidy or a contribution or just general aid. Federal grants that are passed through, including the formal name of the program and the assistance listing number. That assistance listing number used to be the CFDA number, as you've heard us talk about before. They need to know that to put in their E1. So you have to provide that if you're providing them federal funds, non-ARPA federal funds. We'll talk about that more as we go on. And then you need to let them know if the fee is for service arrangements. The third thing that their notification should include is you need to inform them that the Board of Accounts may request documentation to support the categorization of that financial assistance. And frequently, the federal grants that get passed through, they don't have the appropriate title or that assistance listing number. So that's an instance where we'll have to contact them and request that documentation from them of that grant so we can properly identify it. That's also another reason it's important. If you've provided that to them, like I talked about on the previous slide, then they have that. If we have questions, we can see what you've provided them and find out and ensure that the proper numbers and the proper reporting's done. The fourth thing is you should inform the entity not to confuse the E1 with the Secretary of State's business entity report. It's got that word entity in both of them. And a lot of these non-governmental units, they're not familiar with some of that stuff, and they easily confuse that, and they think, well, I've already done my business entity report with Secretary of State. I don't need to do anything else. And that's not true. They file that with Secretary of State and they just think they're done. You need to remind them that these are two separate reports that they have to file separately, and they are not the same thing. And the fifth item, you can let them know that if they have additional questions or need information, they can always email the Board of Accounts, and we have a special email set up just for that. It's notforprofit@sboa.in.gov. So that should be in the notification that you send them, and then they can email us with their questions or concerns, and we can get back with them. Won't involve you after you've notified them. We would deal straight with one-on-one with them. Before we go any further, because I've mentioned it a couple of times, let's distinguish normal assistance from assistance that's provided with ARPA money. So we're going to discuss assistance provided with ARPA money separately from all other assistance that's provided to non-governmental entities. We've determined that if you provided financial assistance using ARPA money to a non-governmental entity or a business or a not-for-profit, etc., that entity, that business or not-for-profit does not need to submit an E1 if that's the only assistance you've provided them. If you also gave them non-ARP money, then they'll still have to do the E1. But if the ARP is all you gave them, you do not need to notify them. But each of these entities should be reported on your annual report. I'm going to talk about that a little bit more in a minute. The reason for that is because I think we ran into this with CARES too, that so much of that funding went to so many non-governmental entities that had never received it before, may never receive anything like that again. We didn't want them to have to file an E1 to notify us of how they use that money particularly, because it would have inundated us with a bunch of E1s and information. It would have caused a lot of confusion on their end. So they don't have to submit an E1 if all you provided them was the ARPA money. So wanted to make that distinction clear here. For all other assistance, like if you provide assistance to a YMCA or a volunteer fire department, you do have to notify them of their requirement to submit an E1. they will have to submit the form. They can contact our Procured Audits division at that email address I mentioned a couple of slides ago with questions on how to do that. But in this case, you do have to notify them. They do have to submit, and you will still list them on your AFR as having received financial assistance. So those entities that you gave ARP money to, they do not have to submit an E1, but you're going to put them on your annual report so that we're aware of who you provided the assistance to. Any other money that you provided, non-ARPA money, you're going to notify them, they're going to submit, and you will list those units as well on your annual report. So that's the part that impacts you, is ARP gets listed on your annual report. Other assistance, those units get listed on your annual report. But if it's ARPA money, they don't have to submit the E1. You don't have to notify them about that. It's just the non-ARPA money that you would have to tell them about, and they would have to report. Now we've got a distinction, ARP money used and non-ARP money used. Again, and I don't think I can say this enough because I know it's a little confusing. ARP money doesn't need an E1 from the entity. Non-ARP money, they do file that E1. So remember, those non-governmental entities receiving financial assistance must be notified that they have some reporting requirements under the law. So you have to notify them, but then what happens? As I mentioned, you also have to report that assistance that's provided on your annual report in Gateway. That part hasn't changed. So that's the same as you've been doing for the last several years, that assistance provided to non-governmental entities gets reported on your annual report. When you go into the Gateway and you're ready to log in, you can see there's that first arrow shows where you're going to click on your annual report. Those non-governmental entities, when they submit their E1, they're going to have to go down to that bottom portion where that bottom arrow is, and click there and start that process for the submission. So what do you have to report to the Board of Accounts as financial assistance provided to non-governmental entities? Well, first in Gateway, after you've clicked on the annual report link that was on the previous slide, you want to go to your AFR main menu, and under core reporting, it's the financial assistance to non-governmental entities section. So kind of where that arrow is pointing. And the kind of information that you're going to have to input is the entity name, their federal tax ID number. So as you're providing that assistance, you want to make sure you communicate with them that you do need that. Their address, their county that they operate in, or their main county if they operate in more than one. The name of an operating officer or a contact person, so that if we have to contact them about something, we've got that name and information available. Their phone number, a description of the funding. So you'll need to list what you're giving. If you've provided ARPA money, you want to put that in there as part of the description. If it is a volunteer fire department, your description is going to be, for a fire protection service or fire protection contract. Also need to include the amount of the funding and then the type of non-governmental entity that they are. So I took a picture of what that page looks like in Gateway, and that this page is not in your material. So just to kind of wrap up, I wanted to just show you what you can find in the user guide. There's a lot of useful information in the user guide for the annual financial report. If you've got questions about that, it goes over most of what we've talked about today. So take a look at that. Take a look at the bulletin from September of 2016. It goes into pretty good detail too about particularly the notifying of these non-governmental entities of what their responsibilities are. And I think once you've looked at those things, and of course, if you have any questions, you can always get with us, shoot us an email or give us a phone call, and we can help you through that process. Now is a good time to start gathering that information because we're just a few months from the end of the year. You may have already provided assistance to entities in the first half of the year. You may plan on doing some more before the end of the year. So if you start thinking about that now and gathering some of this information you know you're going to have, or the notifications you know you're going to have to make, it might make it easier when you get to the end of the year and you're doing your annual financial report and you're in the middle of it and you get to this slide, you've got that documentation already put together. You don't have to go searching for it. So that kind of wraps up the non-governmental assistance portion of it. And since we are very close to football season, I thought this picture was appropriate. So I can now hand things over to Mike, do a little handoff, and talk about the areas that he's going to cover on key contacts and some prescribed forms.
Good morning, everyone. Like Todd said, I'm going to be discussing the key contacts at the state, as well as prescribed and approved forms, and then we're saving questions until the end. The first key contact that we have for you is Tara Klutz. She's the Auditor of State, also the Chief Financial Officer of the state of Indiana. She has 4 primary duties, including accounting for all the state's funds, overseeing and dispersing county, city, town, and school tax distributions, paying the state's bills, and paying the state's employees, which is very important for Todd and I. We like to get paid as everyone else does. So she pays her paycheck. So the Auditor of State is also the administrator of the state of Indiana's deferred compensation plan. Next is the Indiana Department of Local Government Finance, DLGF. I'm sure you all have heard of DLGF. Fred Van Dorp is the budget director, and you can see his contact information there on the slide as well. The DLGF is responsible for ensuring property tax assessment and local government budgeting are carried out in accordance with Indiana law. The department is charged with publishing property tax assessment rules and annually reviewing and approving the tax rates and levies of all cities and towns. Next is Mr. Luke Britt, the Indiana Public Access Counselor, and contact information again is on the slide. As the Public Access Counselor, he will provide assistance, advice, and education concerning Indiana's public access laws to members of the public and government entities. The office also publishes advisory opinions regarding access to public records and Indiana's open door law, which we'll be talking more about on the next slide. Indiana open door law. You're bound to have questions about public meetings, executive sessions, and other items related to Indiana's open door law. Our Accounting and Uniform Compliance Guidelines Manual has some useful information on the pertinent statuses and procedures in Chapter 7. However, most open door questions can be more definitively answered by the Indiana Public Access Counselor, Luke Britt. As there are several statutes surrounding the open door law, we will most likely recommend you contact the Public Access Counselor if you contact with us with any questions. The counselor is the authority on the open door laws. We'll also discuss the PAC a little bit later. For now, please know that the board meeting of your cities and towns are governed by the open door law, which is Indiana Code 514 1.5. Under this statute, meeting of governing boards must be open to the public except when an executive session is held. Questions generally arise regarding the notification required to be given for various meetings and things of that nature. Again, this would be covered in Indiana Code 514 1.5, and generally includes date and time of location of meeting, advance notice of 48 hours, including weekends and holidays, not including weekends and holidays, posting at the principal place of business or where the meeting is being held. Annual notices, like council meetings, will be the first Tuesday of every month. That is permitted. That's just a general example. The notice of a meeting is not generally required to be published in the newspaper. Emergency meetings are an exception to the 48-hour rule. There's also a prohibition on serial meetings. The exception to meetings that are open to the public are executive sessions. Because these meetings are not public, strict statutory provisions exist as to when they are permitted. Those circumstances are in Indiana Code 514 1.5-6.1b specifically. Notice of executive sessions must include the specific statutory reason for the meeting. Minutes must include a certification that only the topics permitted by statute are to be discussed, and final action may not be taken in an executive session. Another thing that I wanted to point out is the Public Access Counselor publishes a handbook to Indiana's public access laws, found on this website here. And so here, the rather lengthy link. The lengthy link is a great tool for more information on the law. You can paste this link into your search engine or type handbook into the search engine on the Public Access Counselor's website, which you can find earlier in the presentation. Next up is the Indiana Archives and Records Administration. They recently had a new contact. Our prior contact retired, I believe, early last year, and our new contact is Amy Christensen. The records management provides assistance in the management of important public documents to state and local government agencies in Indiana. The records management staff will also work with your agency's designated records coordinator to develop a records retention schedule tailored to the needs of an agency or division, allowing you to get rid of clutter. The Indiana Department of Labor and their contact information is on this slide. We receive many questions about overtime, rate of pay, when to pay individuals, etc. Can depend on your local policies is a lot of times what we'll say. We then will refer you to the Indiana Department of Labor if your questions cannot be answered by us or your local policies. I'd like to note that public safety officers have different rules than normal employees. The Indiana Department of Revenue, the sales tax division specifically, and their contact information is on this slide. General sales tax questions, when to charge sales tax, those all can be answered by the Department of Revenue. So now we're going to switch gears and, as I mentioned earlier, talk about our records and prescribed forms. The State Board of Accounts prescribes the forms and records used in cities and towns. The statute calls for the system of accounting and reporting to be uniform for each public office and every public account. We also have to set in writing the standards for which your city or town is subject to during an audit. That written standard is the Accounting and Uniform Compliance Guidelines Manual that we've discussed previously. Also, the Cities and Towns Bulletin is considered part of the written standard. When we do your audits, if we find an error or non-compliance, we will write it up as a comment. Comments are referred to the specific criteria you should be following. So we will reference either the Cities and Towns Manual, Cities and Towns Bulletin, or if you have non-compliance with state statute, we'll reference the Indiana Code. As for the records to be maintained, there are two types of forms: prescribed and approved. A prescribed form is one which is put into general use for all offices of the same class. So, for example, one form for all the cities and towns in the state of Indiana. An approved form is for special use in a particular office. It's an approved form, has been approved for use in lieu of the prescribed forms. Cities and towns are required to use the forms prescribed or approved by the State Board of Accounts in a manner set forth in the manual or in the bulletins. If you want to use a different form or modify an existing prescribed form, or your computer software generates a form slightly different, you will have to get the form approved during an audit. Most of the computer vendors are already aware of the need to have system output reports, ledgers, receipt forms, payroll reports approved. So like we talked about, a prescribed form versus an approved form can be found in the manual for cities and towns, specifically Chapter 1. A new form must be in place for one audit and not be the result of a written comment to be approved. If used during one audit and we do not take exception to it, then it is approved. Number 2, a form requiring numbering still requires numbering either by a printer or the software system. Receipts must be in duplicate or recorded in a register of receipts. Some systems will print 2 copies. We'd have to review that during an audit to verify in order not to take exception. And finally, the checks must be the same as most checks would appear in the register of checks. So that's all I have for the reports and forms, and then we're going to switch over to questions.
All right, we will